Hey, everybody. A quick and dirty report. It's a two for day. This is important because I always stress the importance of keeping your tap dancing shoes on because everything changes all the time in investing. Now, I gotta make sure that's silence and make sure this is not screwed up. Yeah, hopefully it's good. Hopefully the focus is better than the previous video. But this is talking about all the stuff that's happening in the era of AI and how it's actually impacting Bitcoin and Bitcoin miners too. So we'll break into why HPC is important, megawatts are everything, the closeness between Bitcoin mining and AI is quite remarkable. And that's going to bring about a synergy is what I mean to say, synergy between both. And that's going to bring about, I believe, a lot of mergers and acquisitions in the very near future. We're already seeing some of that action right now. We'll dig into some of the math engine time. We'll talk about the startling reduction and the impact of the Bitcoin halving on production and how that's shaken up the whole board and how everything is changing. So let's jump in. This is the Miner T report featuring a couple of names you all know. We'll talk about Iris Energy, Core Scientific, Marathon, BITFARMS, RIOT, CleanSpark, and a few others. So let's, first of all, big thank you to everybody on Patreon to make this possible every day. Michael T, Patreon member since today. Welcome to the team. It's a fun place to be. And none of this is financial advice. Just a guy on the internet playing with a lot of numbers. A lot of numbers. Now, first of all, something happened over the last couple of days. CoreWeave saga. It continued. So the company called CoreWeave that basically houses, I'm tired today, houses NVIDIA chips, total mind blank, has offered to buy Bitcoin miner Core Scientific for $1 billion. And shares popped 35% on the news. But what they want to do is convert a Bitcoin miner into a HPC data center. And this would allow CoreWeave to grow even faster. So all of a sudden, Bitcoin miners are so cheap that people can buy them just for their access to electricity and their walls. Forget the ASICs chips or the ASICs rigs and everything else. And that is incredible. And it was funny because, hey, just one, thank you for coming. A lot of people were wondering, who is CoreWeave? Never heard of them. And they were buying thousands of H100s. Anyway, that's who they are. And now they're looking to grow even further. And they are allowing people to rent their compute capacity for the world. And this is a huge new growing area. So we'll break it all down. Before we do, just to give you an idea of how big AI is, this chart will light you up. Basically, the market cap of NVIDIA is the same as the GDP of France and soon to be maybe that of the UK as well. It is bonkers. It's basically the 7th largest country in the world if you compare market cap to GDP. Mind-blowing. Mind-blowing. That's how, I've been stressing since November 2022 how big this AI revolution is. If this doesn't give you an inkling of what's coming, I don't know what. And then, of course, there's Tesla. Elon Musk is building XAI, ordering, again, tens of thousands, hundreds of thousands of NVIDIA machines. And there was a lot of consternation just over the last 48 hours that Tesla rerouted a lot of their equipment because the south extension of Giga Texas was not complete to house 50,000 H100s for FSD training. So they are putting them on somewhere else rather than let them sit in a warehouse. So housing these things is not trivial. Buying them is not trivial. Waiting for them to be delivered is not trivial. Unpacking them is not trivial. It's really difficult as well to stitch them together and have 50,000 rigs or machines, H100s, running at the same time. It's extremely difficult stuff. And that is what's bringing about this revolution because the world needs this compute. Now, this is another piece from Bitcoin News. Core Scientific signs a 12-year, $3.5 billion partnership with NVIDIA-backed cloud AI company CoreWeave. All right, this happened a few days ago. And again, it's all about the megawatts. What Core Scientific is given to CoreWeave is 200 megawatts of data center space for their HPC, the high-powered computing. And that will launch sometime in 2025. And then, of course, CoreWeave said, why don't we just buy you guys all together after partnering? Now, JP Morgan is on top of this too, because not only are they analyzing Bitcoin miners, but they have a pretty good practice around all things AI. And I think it was Jaron Jackson noticed that where miners that are building HPC are getting re-rated with a premium. So JP Morgan reiterated a outperform, I think it was, on Iris Energy, specifically for the HPC opportunity. And it's not about their hash rate or anything else. It's about how quickly they could grow. And HPC computing is not priced in. That is the combination of HPC and AI, which are powerful technologies when combined, greatly enhance computational capabilities and efficiency. And that's the whole new play here. And the question is, the eternal one, thank you for coming. The question is, why? Why now? What's all with this HPC stuff and what's the overlap with Bitcoin mining? Well, there's a lot. So I'm going to spend a few minutes on about 3 or 4 slides just to explain how they can work together and how they are so synergistic and why it's getting so much attention and why it's causing the repricing of assets. So the connection between AI companies and Bitcoin miners is driven by their need for substantial and reliable energy sources. We've heard of government administrations in the US and other parts of the world where they want to shut down Bitcoin mining because it uses too much electricity. I'll show you that's a weak argument. It's basically because they don't like Bitcoin. Well, I'll show you all the energy numbers. But it's fascinating to see now. What are they going to do? It's like, okay, US is now going to shut down AI because it's bad, uses too much electricity. Of course they can't. No, it's critical. It's a critical new industry. But both are very energy intensive, requiring huge data center infrastructure and a whole bunch more reliable electricity. And another thing that Bitcoin mining needs, not only is there a lot of similarity, but Bitcoin miners also need to stabilize their revenue streams too, not just be completely reliant on Bitcoin. So let's talk about the overlap in data center needs. Miners operate in these large-scale data centers, high power densities, cooling requirements. CleanSpark now has their rigs operating underwater to keep them cool. AI operations also require robust data center infrastructure to handle significant computational workloads. In fact, that piece at the south end of Giga Texas will be heavily water-cooled as well when they put in those 50,000 H100s. And they also have a special cooling tower on the outside and a very special roof over the building to make sure these things stay cool, because that's so important. Also, Bitcoin mining facilities, existing infrastructure makes them very attractive for AI companies looking to expand. That's it. Be in a place where it has walls and a roof and a lot of electricity that's reliable and cheap too. Cheap, very important. Now, the cost of electricity, speaking of cheap, is two things. One, they need a reliable source of power and make sure it is consistent. They can't set up all this equipment and have the power go out or not be available during key times like summer times, etc. Now, there's other things too that actually happens is not all the time is there complete overlap between HPC and Bitcoin mining. So, for example, a Bitcoin miner can operate at the ends of the earth and doesn't have to be near reliable internet or fast transaction speeds, but data centers do. They need to have very low latency, which means the data center needs to be close to where the user's action is, so they get very fast response from servers in milliseconds. Also, low latency is crucial because it directly affects the performance of applications and servers. And high latency can lead to slow page load times, lag in online experience, etc. Also, for some, there is an area of compliance and data recovery. So you can't have data centers housing sensitive data outside of certain borders. Very important. And then there's other disaster recovery stuff too that's very important. So not every miner in every corner of the world will be purchased, but those that are close to where the action is will be, for sure, or at least the AI companies will try to mine them. And I did mention earlier, miner diversification of revenue streams is critical. As you know, Bitcoin miners are dabbling with AI and HPC markets to reduce that dependency. Iris Energy is one that made the first big move in that direction. I know that HODL dabbled in the past because they had Ethereum mining machines, which are GPUs from the past when they used to mine Ethereum, and then they pivoted to AI, but I don't know where that is right now. Probably not going too well. Also, AI firms want to partner with these Bitcoin miners to leverage their energy contracts and data center infrastructure. Thank you, Sir Winston. As I said, it's all about the megawatts. Now, what else? 3 reasons I believe there's going to be a lot of M&A activity happening now, because sometimes some miners have all the infrastructure, but maybe they got old rigs. Maybe they're just not making the cut. However, strategic interest AI firms are really starting to look at all these Bitcoin miners because of their power contracts and data center infrastructure. Nothing else. They don't care about the ASICs rigs. Also, network rationalization. Sorry, that should be 1, 2, 3. Excuse that. M&A will help rationalize the Bitcoin network by reallocating power capacity, which can improve the overall efficiency and profitability of the remaining operators. And financial stability too. Having a revenue stream that is not just based on Bitcoin mining or rewards is very critical. Let's look at the power, because a lot of people are concerned that all this stuff uses too much power. Well, it's just necessary. So if you look at the amount of power used by the US military-industrial complex or the banking industry, they all use a lot of power too. But there's been increased demand for AI centers. The actual data center market size is about $73 billion. It's growing at 17.6%, probably faster considering how fast this revolution is happening. And these global data centers for AI use 200 terawatt hours of power. 200 terawatt hours. How does that compare to Bitcoin? I have some numbers, and shout out to the team at Cambridge where I sourced this data from. But hash rate growth, I calculated myself, is 37.5% over the last 12 months. And the energy used by Bitcoin miners is somewhere between 67 and 120 terawatt hours globally. So it's a fraction of what the AI data centers are using. So again, when the politicians will come after Bitcoin miners, they're going to also have to shut down AI data centers, which they can't. And that's just the nature of the beast. Also, the big other angle is renewable energy. Again, to get the regulators off the backs, there is pressure to adopt sustainable practices. Bitcoin mining consumes a lot of energy, and it uses a huge amount. About 56% of all Bitcoin mining energy is sustainable, renewable energy. And this is what the AI data centers are looking for too. This is what makes them a very good fit. Not only are the Bitcoin miners housed near cheap energy, but also they got a huge percentage of renewables too, which fits the narratives for the AI data centers. There's a Bitcoin miner playlist up here. If that's all you're interested in, that'll be here after the fact. Now that I've set the stage for the importance of megawatts and HPCs, let's talk about the miners themselves and see how they are getting on. And then I'll talk about kind of my plans for re-rating how we appraise these miners too. First of all, and it hasn't changed everything completely, but it does have an impact. Let's look at the impact on the Bitcoin halving so far. This is marathon mining year over year. Unfortunately, that red line should be under the installed hash rate, but ignore that. I just want you to focus on 2 things. This is the data from the month of May 2023 versus the month of May 2024. What's crazy about this, all right? They mined a year ago 1,245 Bitcoin in the month of May. This year, they mined 616. But despite that, their operational hash rate has gone up 106%. All right? Yunka, thank you for coming. Let me put that in perspective. The hash rate has more than doubled. And year over year, the amount of Bitcoin that they've mined is half, which means things have gotten 4x harder than they were a year ago, in simple terms. And this is crazy. This is going to have a huge impact on the miners. And we're very fortunate that Bitcoin is trading currently at a price of $71,000, almost. Let me check. I think it fell down a couple of $100. 70,700. Fell down $300 since I did my last video today. But let's look at what this haircut looks like for these miners month over month. This is comparing April to May. And here, and shout out to the Invest Informant on X, Danny Marquez, for this cool little chart. Saved me the time, put it together. But it shows you Bitcoin production, how it dropped month over month across all these miners by on average 47.6%, which is similar to the 51% year over year, despite the more than doubling of hash for Marathon. So that's a pretty stunning statistic. Iris Energy down 32%, Marathon 33%, BitDeer 37%, CleanSpark 39%, and he's still waiting on reports from Hive, HUT, etc. So it has gotten not only a lot more competitive, but a lot harder to mine and get rewards. But again, the value is up incredibly in a very short window of time. Now, miners, despite all of this, maybe this is because of these new HPC pivot. It's putting a new re-underwriting rate on the value of these miners. We had things like Wolf, Iris, and Sphere all up, 16, 13, and 12% today. And that's big. Even RIOT Energy up nearly 6%, despite Carousdale Capital deciding to short it. But there's more news regarding RIOT in a minute too, so it's kind of crazy. I don't think I'd be shorting Bitcoin miners when we were just 3% into the post-halving period. Now, this is also another little Bitcoin chart. This is actually Bitcoin performance over the last 18 months. You can see so far in 2023, Bitcoin is up 157%, and 2024, 73%. So combine those two, that is very substantial. That's how the price goes from 15,500 up to 70,000 and change. And it's good it did that because the miners are under a lot of pressure, but they're making a lot more money now, at least from Bitcoin, because the price is higher. So that's simple. Now, RIOT is also trying to do some merger and acquisition stuff, not just CoreWeave trying to buy Core Scientific, but this is BITFARMS. RIOT has been trying to snag them, but BITFARMS said, nope, price is too low. We think we have a lot more potential, and you're not seeing exactly how much we are worth. And I think the priced at $2.30 a share, I think the value is about 950 million, which is not too different from the $1 billion that CoreWeave offered Core Scientific, and Core Scientific also said, no thank you, not interested. But again, this is helping the whole space. This is why all the miners are pumping, because now AI companies see the value. And the miners themselves are trying to buy each other, and the miners who are trying to be bought know how much they're worth, especially with their scaling plans. Now, in addition, though, RIOT already owns 12% of BitFarms. Last week, I think, was 7 or 9%. So they keep on chipping away and buying it. Let me check, actually, the price right now. I haven't seen if it's changed in after hours. I can't even see. Where is my miner playlist? Anyway, I can't find it right now. There it is. Everything got there. Miners. And pull up the exact price. RIOT is up. BitFarms is, because they offered it 230. I'm trying to find the exact price right now. BitFarms up in after hours is now 247. So they were correct to ignore the 230 offer. We're already now at 17 cents more a share. Anyway, that's just the RIOT news. Let's get into a little bit of math engine time. This will not be a detailed comprehensive thing because I wanted to bang this out pretty quickly, but just share a couple of things. One is some updates to the current hash versus future hash growth rate. There's been a few little modifications, like Iris Energy has gone from 30,000 up to 40,000 since I did this last week. And if you look at the largest hash rate growth, RIOT is number one with 388%. And by the way, I verified last week all of their orders for ASICs miners, and that backs into this 388% growth directly. So RIOT, not only are trying to buy BitFarms, but they also have the orders in for the ASICs to get to where they want to be at over 40 exahash. Thank you, A Bottle of Red, for coming. Iris Energy, again, going from 8 right now to 40 as well. Big jump, 342%. Clean Spark from 17 to 56. Is that 56? Again, another big jump of 224%. And the others too. So it's very clear from this chart, in order to survive, these miners have to grow very, very quickly. Let's look at my brand new ratio. Since I shared this a week ago, now I have the data in for the month of May for most of the miners. Those that are in red here, there's no data. But this ratio dramatically changed from May to April, April to May. Now, last week, Wolf was at the top, and it still is, but it's nowhere near the dollar production per rig that they were getting, which is north of $400 last week. Now it's $274. Hive 220, jumped into the number 2 slot. Iris Energy 214, which leapfrogged over Clean Spark 212. Marathon $203. BITFARMS 197. BitDeer 194, and on Cypher 189. The key here is per rig, you want to make as much as possible. This ratio looks at exactly how effective and efficient the whole mining operation is based on the money they make and how much Bitcoin they can mine during that month, taking the average price of Bitcoin during that month as well. Again, this ratio will change radically as we go forward, but it's very interesting to look at. Also, what's also changed, the biggest producers in April versus May, and the haircut you see here, Core Scientific went from 803 Bitcoin mined in the month of April to 568 or to 448, nearly half in just a month. Marathon 737 to 568, but Marathon are also growing their hash very quickly too. That's reflected here. Clean Spark 721 down to 417. RIOT 375 down to 215. So basically that 42%, 44% haircut is all across the board. HUT I estimated, so there's only one I didn't have in, but I took an average of all the percentage drops and applied it to HUT, but it may be worse than 80 for the month, which is remarkable. Anyway, the HODL as well, which is also important. This is kind of interesting because I had anticipated that a lot of the big miners that have huge HODLs, like Marathon, nearly 18,000 Bitcoin, worth nearly $1.3 billion, they can use that to buy distressed miners. So that's probably what they're going to do in the very near future. HUT, as a percentage of market cap, is the winner of this because they have over 8,000 Bitcoin, and that is nearly half of their entire market cap. So there is ARB advantages there with that amount of HODL. Hive number 2 at 36.62%, DMG 32%, RIOT 22%, Marathon 21.58%. Despite having the biggest bag, they also have the biggest market cap. Therefore, the percentage is down. Cypher 12%, Clean Spark 12% as well. And some of the others, like Iris, they don't HODL because they're just focused on scaling as they go forward. But what's also interesting is this chart too, because miner HODL is at a all-time low. So per this, all the other miners, except for those top ones I showed on the list here, are selling. But when I look at the performance of these miners into their HODL month over month, all have increased except for one. One went down, and I think it was Cypher sold a little bit. But here, the miner bags are at all-time lows again, which will help feed the supply crunch in the very near future, we imagine. This is the final unweighted. I didn't use my weights, just straight ratios, about 20 compound ratios that go into this. And right now, you'll see how things have changed in this shakeup. Marathon up big in this report to 4th place. They haven't been up there in a very long time. BITFARMS fell down. Clean Spark fell to 2nd place. RIOT jumped up to 1st place. And there's, again, a lot of changes will happen with this AI revolution and the need for megawatts and HPC. I'm trying to figure out ways of creating ratios that will allocate, whether on a percentage of revenue or whatever, a load to this. It's not in there yet because it takes time to calculate. That's why I did it unweighted. is just raw. So you can see how things have shifted just since the halving. It's quite startling. And one other thing too that's important, I'm really trying to get my head around, is determining which companies would be most ripe for acquisitions. You know, which AI companies are looking after which Bitcoin miners based on where their facilities are there. What economic synergies are there, such as cost sharing for electricity, who needs to diversify their revenue streams, what other cases are there for collaboration and equipment. So it's going to be interesting. And again, miners are the hardest thing to analyze, and now it's just got even harder. So I just want to give you that update. A lot of people were wondering what's going on. That is what we know so far. I'll be doing these minority reports every week, so stay tuned for more. Expect some M&A news in the meantime, happening every single day. And all of these videos are recapped by the team on Substack too. If you want the slides and the numbers and the data and you want to listen to it at the gym, you can do that too. Thank you all for coming. Complex area. Hope you enjoyed the show. Thank you to the mods in the chat, and I'll see you all tomorrow. Bye-bye.